Hello, everyone, and welcome back to the Freedom Escape. If you're new here, thank you so much for stopping by. We're a brand new channel dedicated to bringing you the latest news on global markets, investing, artificial intelligence, technology, business, and the economy. We're posting multiple high-quality videos every single week. So if you enjoy understanding what's really happening behind the headlines, make sure to subscribe and join us from the very beginning. Now, let's get into one of the most important weeks investors have faced in months. Why this week is so important. Every earnings season matters, but some weeks stand out more than others, and this is one of them. Over the next few days, several of the world's largest technology companies will release their quarterly earnings reports. These reports won't just tell investors how much money these companies made. They will provide valuable clues about where the global economy, artificial intelligence, and financial markets may be heading for the rest of the year. Companies like Tesla, Alphabet, and Intel collectively represent trillions of dollars in market value. Millions of retirement accounts, pension funds, ETFs, and investment portfolios around the world are heavily invested in these businesses. When companies this large surprise investors, the effects are felt everywhere, not just on Wall Street. Sometimes one earnings report can add or erase hundreds of billions of dollars in market value in a single trading session. That's why analysts, hedge funds, institutional investors, and even everyday retail investors are watching this week extremely closely. Understanding earnings reports. For newer investors, let's quickly explain why earnings reports are so important. Every 3 months, publicly traded companies release detailed financial results. These reports include revenue, profits, operating expenses, cash flow, future expectations, and comments from company executives. But surprisingly, the numbers themselves aren't always the biggest story. Investors are often much more interested in what management says about the future. If executives believe demand is increasing, customers are spending more, and new products are succeeding, investors usually become optimistic. However, if companies warn about slowing sales, weaker consumer demand, or economic uncertainty, markets can react very negatively, even if current profits look strong. This is why earnings season often creates major market volatility. Tesla, more than just an electric car company. Let's start with Tesla. Years ago, Tesla was simply viewed as an electric vehicle manufacturer. Today, many investors see something much bigger. Tesla has transformed into a company operating across multiple industries, including electric vehicles, artificial intelligence, robotics, battery technology, autonomous driving, renewable energy, and software. Because of this, Tesla's earnings report is expected to attract enormous attention. Investors will be watching vehicle deliveries, revenue growth, operating margins, and free cash flow. But perhaps even more important will be management's discussion about the future. Can Tesla maintain strong growth despite increasing competition from Chinese automakers? How quickly is full self-driving technology improving? Will Optimus, Tesla's humanoid robot project, eventually become a major business? How much money is Tesla investing in artificial intelligence? These questions may be even more important than quarterly profits. Tesla's CEO, Elon Musk, has repeatedly said that AI and robotics could become much larger businesses than automobile manufacturing itself. Whether investors believe that vision could heavily influence Tesla's stock price. The AI revolution continues. Artificial intelligence remains one of the biggest investment themes in the world today. Over the last few years, AI has completely changed how businesses operate. Companies are investing billions into automation, cloud computing, large language models, cybersecurity, healthcare technology, finance, and manufacturing. Many analysts believe AI could become as revolutionary as the internet itself. Because of this, investors aren't just buying technology companies. They're investing in the future of artificial intelligence. Every earnings report this season will include one major question. How is AI affecting the company's business? Any company demonstrating successful AI adoption could attract significant investor interest. Alphabet. Can Google stay ahead? Alphabet, Google's parent company, is another major focus this week. Google dominates internet search, online advertising, YouTube, Android, cloud computing, and increasingly, artificial intelligence. However, the company now faces enormous competition. The rise of AI assistants has changed how people search for information online. Instead of typing questions into traditional search engines, more users are asking conversational AI tools for answers. This creates both opportunities and challenges for Google. Investors want to know whether Alphabet's AI investments are generating real financial returns. Cloud computing is another area under close observation. Google Cloud has become one of the company's fastest-growing divisions. Businesses worldwide continue migrating their operations to the cloud while simultaneously adopting AI technologies. If Google reports accelerating cloud growth, investors may see it as evidence that enterprise AI spending remains very strong. Advertising revenue will also receive enormous attention. Advertising still generates most of Alphabet's income. If businesses continue increasing advertising budgets, it suggests companies remain confident about future consumer spending. If advertising slows, investors may worry about broader economic weakness. Intel and the semiconductor industry. Now, let's talk about Intel. Although Intel no longer dominates headlines the way it once did, the company remains one of the most important players in the semiconductor industry. Semiconductors are the foundation of today's digital economy. Every smartphone, every laptop, every electric vehicle, every AI server, every data center, and almost every modern electronic device depends on advanced computer chips. Without semiconductors, the modern economy simply cannot function. Demand for AI computing has dramatically increased the need for powerful chips. Companies worldwide continue investing billions of dollars into data centers, capable of training increasingly advanced artificial intelligence models. Intel's earnings may provide valuable insight into whether this investment boom is continuing. Strong guidance could improve confidence across the semiconductor sector. Weak guidance could raise concerns that AI spending is slowing. Why interest rates still matter. While earnings are grabbing most of the attention, investors are also watching something equally important: interest rates. Central banks have spent the past few years raising interest rates to fight inflation. Higher rates make borrowing more expensive. Businesses pay more for loans. Consumers spend less on homes, cars, and expensive purchases. Economic growth often slows as a result. Technology companies are particularly sensitive to higher interest rates because much of their value comes from expectations of future growth. If investors believe rates may begin falling in the coming months, technology stocks often benefit. If inflation remains stubbornly high and rates stay elevated, markets may become more cautious. That's why investors carefully analyze every piece of economic data released alongside earnings season. 3 possible scenarios. So what could happen after all these companies report? Scenario 1. Strong earnings. If Tesla, Alphabet, and Intel all exceed expectations while providing optimistic guidance, markets could experience a significant rally. Technology stocks may lead gains, investor confidence could improve, and optimism about AI would likely continue growing. Scenario 2. Mixed results. Some companies could beat expectations while others disappoint. In that case, markets may become volatile, with investors rewarding stronger businesses while punishing weaker performers. This is actually one of the most common outcomes during earnings season. Scenario 3. Broad disappointment. If several major companies miss expectations and lower future guidance, markets could sell off sharply. Investors may become concerned that economic growth is slowing faster than expected. This would likely increase volatility across global financial markets. What long-term investors should remember. Regardless of what happens this week, long-term investors should remember one important lesson. Short-term market movements rarely determine long-term investment success. History shows that markets experience corrections, rallies, crashes, recoveries, and periods of uncertainty every single decade. Yet, over long periods, diversified investors who remain disciplined have often been rewarded. Many of history's best investment opportunities appeared during periods when uncertainty was highest. Rather than reacting emotionally to daily headlines, successful investors usually focus on fundamentals, diversification, patience, and consistent investing, that's much easier said than done. But history repeatedly shows the importance of keeping a long-term perspective. Why this matters, even if you don't own stocks. You might think this news only matters if you're an investor, but that's not true. Large technology companies influence employment, innovation, consumer spending, retirement funds, pension systems, business investment, and even economic confidence. If these companies grow, they often hire more workers, invest in new technologies, and stimulate broader economic activity. If they slow down, businesses across many industries may also feel the impact. That's why millions of people who never buy individual stocks are still indirectly affected by earnings season. Final thoughts. The next few days could shape market sentiment for weeks, or even months to come. Tesla will offer insights into electric vehicles, AI, and robotics. Alphabet will reveal how artificial intelligence and digital advertising continue evolving. Intel will provide clues about the health of the semiconductor industry and global AI infrastructure spending. Together, these reports will help investors better understand where the economy may be heading next. Whether markets rally or decline, staying informed is always one of the most valuable investments you can make. Here at the Freedom Escape, our goal is to explain complex financial news in a simple, balanced, and easy-to-understand way. If you enjoyed today's video, please leave a like, subscribe to the channel, and turn on notifications so you never miss our upcoming uploads. Remember, we're a brand new channel, and we'll be posting multiple videos every week covering investing, global markets, artificial intelligence, business, economics, and the biggest financial stories shaping our future. Thank you so much for watching, and we'll see you in the next video.